Jim Simons is unique in a lot of different ways. Part of it is the track record and the consistency, which I've never seen before. There's some people who had unbelievable years or periods. My first book is called The Greatest Trade Ever, and it's about how John Paulson and some other people pulled off the 2008 trade, the subprime trade, in 2009, and he made $20 billion over 2 years. No one's ever come close. And you can learn a lot from that trade. The problem is often these guys, John Paulson in particular, they change the way they invest after they score something, a big year like that. So John Paulson, his whole life was about limiting the downside and looking for huge upside trades. And that's what the subprime trade was. That's why they did so well in 2008, 2009. But the problem was after they scored that huge, remarkable trade, John grew his firm and they got to like $35 billion in assets under management. And not only that, but he changed the way he invested. He started buying things like drug stocks and bank stocks and gold with high upside, but also high downside. And that's not what made him who he was. So he got away from what his focus had been. And it happens over and over again. It makes sense. You do really well one year, you do remarkably well one year, and investors throw money at you. And how do you say no to that? It's hard. And you only have yes men around you or yes women. You have nobody to tell you, hey, boss, yeah, we had a great year, but I don't think we could handle so much money. No one ever tells their boss that. You get fired or whatever, demoted. So no one was around to tell John Paulson, you know what, $36 billion is probably too much to manage here. And he thought, I've got so much money, I can hire the best people now, right? I can handle all this. And geez, I just did what I did. So I'm feeling pretty good about myself. By contrast, Jim Simons handed back money every single year. So the fund was $10 billion. And when they would make 60% on that, so let's say $6 billion, he would send checks, $6 billion to his investors, which included himself, as opposed to rolling it into the fund and then you get a management fee on that fund and keeping it big and growing it, et cetera. He determined that their algorithms, their signals would only produce X amount of profits and no more than that. And beyond that, they're watering it down. And to his credit, he stuck with that.